Felix here. In this video, we're going to be covering AI investment opportunities, what to buy, and yes, what to sell, how to increase your income with AI, how not to get fired. That's a big one, isn't it? And why does AI actually matter so much? We're giving away Apple TVs, subscriptions to our $800 a year newsletter, and much, much more. All you've got to do is comment down below and share this video and you'll automatically enter to our weekly raffle. So what are you waiting for? Goldman Sachs, the lovely investment bankers with a warm heart, said that they are expecting 300 million layoffs across Europe and the US. 300 million. That's a lot. Okay, maybe it's not going to be as many if you think, but if it's 100 million, it's still a tremendous amount of jobs lost. And who's getting fired? It's not factory workers being replaced by robots. No, it's high-paying service jobs. Those are being automated or made redundant. We look at which companies, which industries, which job types, so you know what to expect and where to make money. Now, the real reason why this matters so much is that what Goldman Sachs really is going on about is they're saying it could increase profit margins at listed companies on average by 4%. Maybe think that's not a lot, 4%. Well, the average profit margin at S&P companies is presently just below 11%. But 4% on top, that's a 40% increase in margins that would therefore logically lead to a 40% increase in share prices. So everybody who has assets and shares gets a lot richer and everybody else gets laid off. That's essentially the world we're staring into here. So is it a bubble? Some people are saying, well, have a look at this chart here from Bank of America and you see that it's a baby bubble. It's barely a bubble yet compared to Bitcoin or the dot-com bubble of the 2000s. And you see, no, not really, not yet. Now, who's going to get fired? Well, and therefore, which stocks are going to benefit the most? Because we live in this moral vacuum where companies make more money and nobody really cares what happens to anybody who works there, right? So who's getting fired? Well, office and clerical staff, assistants, you know, that kind of thing, typing pools. But lawyers, yes. Engineers, yes. Architects, yes. Operations team, HR, back office, and indeed management. So maybe you are not feeling quite as safe in our roles now. Why is that? Well, we're going to show you here some actual examples of how AI is used and how it's going to make things more efficient and more profitable, and therefore how you could benefit from that and how you can make sure that you are not the one who gets fired. So first of all, which companies are mostly affected by this? Well, the companies, the service companies with the most employees. So let's have a look at those. Got them on my screen here. I'll share it with you. And you've got biggest employer in the US, Walmart, 2.3 million staff. Okay. The shelves are not going to stack themselves, but they've got HR, they've got quality control, they've got middle management and higher management and more management and purchasing and logistics and all the people who are organizing, you know, who's going to run out of cornflakes on Sunday. You can automate that. If the AI makes the buying decisions, if the AI sends the automated orders to logistics and says, ship the cornflakes to there because Felix eats a lot of cornflakes, I don't, but some people will. Then you can, first of all, make sure that no shelf is ever empty and unstocked, which is going to push up profit margins because you're never going to walk into a Walmart again and going to be like, they're out of cornflakes. This sucks. That's one thing. And of course, humans are currently doing that based on lots of data and lots of expensive analytical tools, but you don't really need the human anymore. That's just like one little example. Amazon, yeah, you could definitely see that. I think a lot of HR and IT and lots of stuff going on there. UPS, yeah, okay, a lot of people running around, I get that. But let's look at something that's a bit more like servicey, like Berkshire Hathaway. That's essentially an insurance company and a lot of other stuff too. But insurance, well, all the loss adjusters, all the people dealing with you to renew your policies and reminding you and all that kind of stuff can all be automated, right? So a lot of people here, you would think we could see a lot of layoffs. JP Morgan Chase, banks. Banks have huge middle office back office teams who go through all the trades and check everything and do all the compliance and all that kind of stuff. I used to work on the trading floor of a bank. It's a team about this big of us, and then there's a team that was way bigger that was sort of sitting behind us. And they were doing all the middle office stuff. That could basically be getting rid of HR and all these people as well. And so you look at these guys, Wells Fargo, Microsoft, CVS, the big banks, Google, manufacturing, maybe not as much like Ford, but certainly anything that has a strong service element, Oracle, American Airlines, Tesla, all these guys who are employing a lot of people that are not necessarily purely client focused. So they're not standing behind a desk or they're not carrying something from A to B. They could certainly lay off a lot of them. And it's very likely to happen. Now, Goldman Sachs also says it is the artificial intelligence, this is the quote, represents the biggest potential long-term support for profit margins. They estimate a 4% boost to net margins. That's real profits, none of that higher up stuff, over a decade. So very long period of time, but that's a big boost, right? Do you know the lovely hedge fund billionaire Steve Cohen, another man with a very warm heart who really cares about mankind? He says that investors are too worried about the market downturn. They should be focusing not on the recession, but the big wave, the opportunity brought on by artificial intelligence. And he's basically saying, we're going up. Now, he's not going to get replaced by AI, is he? And so therefore, he doesn't really care. But he says, I'm actually pretty bullish. He said that last week on Tuesday. Now, what kind of skills can you learn to make sure that you're not part of the hundreds of millions of people who are going to get laid off? And I honestly don't think this is doom and gloom talk. I think this is the internet made everything a lot faster and more efficient, but it also created a lot of tasks, right? How many emails do you answer every single day? How many messages ping up on all these management tools that you're using? Well, a lot of that's going to go away. And that's why a lot of the jobs are going to go away. So one of the things is just, email, copywriting with ChatGPT. I'll show you an actual example of how you can use it right here. But just to give you a feel, I pay copywriters $10,000 a month across my businesses. Why? Because copywriting is a very, very high value add. You need it for brochures, for websites, for social posts, for all sorts of stuff. And before AI, you needed a few very, very skilled wordsmiths who could do it. Very few people could. Now with AI, almost anybody can become a great copywriter. Maybe not the most amazing copywriter in the world, but a great copywriter who can get paid serious money for that. So figure it out, learn it, play with ChatGPT. Video editing, second point. Okay, YouTuber here, obviously that's on the top of my mind, but we're now using tools like Opus, for example, and it just does amazing things. I can record a long form video like this and it'll generate automatically some short form video suggestions, which are actually pretty good, which means that our video editor can create a lot more content, become a lot more efficient. But if you're a larger organization that creates lots of video, you might be able to reduce the size of your video editing team. But which is the video editor you're going to keep or going to hire? Well, the one who understands how to use these tools. Do you sit around in meetings a lot of the time? Is there somebody who takes notes and minutes and then sends them around and circulates them and all that kind of thing? Well, there are tools like Otter.ai, for example, that automatically take the notes. Everybody can collaborate on it live while they're in the meeting, and it saves you hours and hours of meeting follow-up, which means, well, either you don't need that assistance anymore, or the assistant can do something a lot more useful, a lot more efficient. So if that's you, then make sure you learn how to use those kind of apps. Now, what kind of stocks should we be buying? Well, the obvious beneficiaries here, and of course, this isn't financial advice. Don't know you. I'm just giving you the opinion of an old investment banker here. Number one, NVIDIA, as everybody was saying, right? NVIDIA is generally perceived as the shovel of the AI business because they make the kind of chips that you need to run a lot of AI software. Who else? Well, Microsoft has done a pretty smart job becoming a key investor in OpenAI and suddenly challenging Google. Who would have thought we would ever possibly replace the search engine of Google? But it's happened before. Also bear in mind that with most innovations in the past, it was a winner-take-all approach, right? We've got one company that runs all software, essentially, Microsoft, right? All operating systems. We've got one company that runs all search and so on. And that's typically the way the world seems to be working. One social media platform, Meta. Okay, there are some others, but, in terms of size. So which stocks am I buying? Well, I think I go back to who's going to get the biggest margin savings. So, zoom back and look at that. I think that's what I'd be looking at. And then you can look at, the Googles and the Microsofts and those kind of guys who are really, really actively in on this. Now, there will be bubble stocks. Just because everybody has AI in the name doesn't mean it's necessarily going to be a company that survives. So I generally go for the ones that have really good cash flow, high gross margins, and are likely to survive. Now, which stocks are going to get pummeled by this? Well, a lot of online learning companies like Chegg. Do you know Chegg? Chegg is a company that basically provides you the answers for your homework. If you're too lazy to do it yourself, Chegg will do it for you. And you might be thinking, well, okay, I don't use that, but it's a business. And here is this stock chart. And this is a stock chart. This is an options trading tool that we've developed, optionswatch.io. You can try that also out for free as well. You can see it's pummeled from about $17 to now trading at $9.22. Who needs a tool that gives you the answers to your homework, which is a paid subscription service, when you can get the answers for free from ChatGPT? Well, nobody really, right? So what's the point of this? So you could set up a trade like this. And again, this is an example. This is not financial advice. This is a bearish trade. It would cost you $80 to set up. That's the worst outcome. You could lose $80. And here by July 21st, as long as the stock doesn't go up by more than 10%, it could either go up 10%, or it can go down all the way, you'd make a 25% return, which is not a bad setup on something that I think is, well, looks like a pretty rubbish company. But there are others. There's Pearson's in the UK, there is Udemy in the US, and many others that are in that sort of space. So you can look for companies that are likely to be replaced. And I think there's an opportunity there to short. I don't like to short because it can swing in the other way. It can cost you a lot of money. But with the kind of setup that I just showed you, you could risk only $80, which is something that we could handle and we can make some money. If you want to learn how to set up those kind of trades and be mentored by investment bankers with literally decades of years of experience behind them, then give us a ring. Simply go to felixrenz.org/coaching. Book a call with my team. They'll walk you through it. They'll answer every single question. And if it isn't for you, we'll chuck some free, amazing resources at you just to make sure it was worth your time. And I'll show you exactly how I trade, every trade I make, how I made the 120-something% return on capital employed last year, and what I do every week. We do live sessions every single day to make sure that you get the financial freedom information that you deserve and that Wall Street doesn't want you to have. Now, how else can you make some money? Well, I'm actually giving away 45 courses. It's called the Financial Freedom Program. It teaches you everything you need to know about being a great stock investor. Why are we giving away 45? Well, we've just hit the 45,000 subscriber mark, and I wanted to say thank you to you. That is usually a $1,500 course. We are giving you 99% off. Yeah, 99% off. So you pay $15, and that's just because our system needs you to pay something. So the coupon code is down below. It's 99PC, 99PC. And you can learn how to really build some money with stock investing, build lasting wealth, understand what stocks to pick and what not, how to set up your portfolio and everything else. It's a course that about 1,000 people have been through and thoroughly enjoyed. And yeah, so we're giving away about $67,000 here of financial education. Check it out. There are only 45 of them there. You don't want to miss out on that. And I thank you for watching. And I look forward to seeing you on the next one. And let me know, of course, what you're thinking of AI. Are you buying? Are you selling? Are you worried about your job? Are you learning? Are you thinking, nah, this isn't really going to affect me because I don't know why, but maybe you have a good argument for that. Put it down below. And I appreciate you tuning in.